All right, good morning, everyone. Today is July 7th, 2021, and I'm back with another edition of the Wednesday live show. And we're going to take a look at the open trades today briefly, and let's get started right away. First of all, the S&P 500 is poking at a new all-time high today again. Interestingly enough, let me zoom this chart out a little bit here. Interestingly enough, yesterday we got a little bit of a sell-off, right? Intraday, market opened and started pushing down, and seemed like we were going to get a sell-off, and then midday there was basically a V-shaped recovery, and the market practically rallied all the way back to where it started. It opened at a new high. And so today you can see that it's kind of pushing at these highs again, but kind of interesting because ahead of the 4th of July weekend we had this big run up. It was kind of boring for a few days. Like every day the market would kind of make a new high by a couple of points or whatever, and I think it was up like 7 days in a row, something like that. 2, 4, 6, yeah, 7 days in a row. It was the market was up, and of course all these were like new intraday highs. And then right ahead of the, let's see, what day was this? Yeah, this was the 2nd of July, so that was right ahead of the 4th of July weekend. We had that big long range day up. Well, I wouldn't say it was too big of a long range day, but anyway, yesterday was weird just because of the gap up and the break below that low and that, but the recovery was pretty interesting. And of course, here we are today, right back up at the highs. But the funny thing that I notice about the market recently is that it tends to sort of want to sell off right first thing in the morning, right? Like typical day the market gaps up or whatever is really strong, and then it likes to pretend like it's going to be weak early in the session, and then of course it rallies. And so here's my main trend line. I put it on the SPY because it fits a little bit better. And of course we look at this each week, and still intact. Pretty steep, markets rallying at a 45-degree angle, and this literally goes back to the start. Here's something that's kind of interesting is you can switch this to a performance chart, which shows I should have left it where it was. So this shows the basically the rally since the pandemic March lows there. And yeah, so 90 something percent, right? 93%. Actually, I believe it's a little bit more than that. I believe well, it's hard to get it exact, but like 98% off of the actual March low. So the stock market's doubled since the March low. And of course, it's kind of strange, but it seems like, and I can't explain this, but it just seems like the market is almost it's just too strong. So this rally, like all this, I mean, every little bit of what you would think would be bad news is getting shrugged off. And I mean, been extremely resilient, and it's a long way down to this trend line here. So long as the market holds this trend line, everything, should be good. When this trend line breaks, there's tons and tons and tons of support. But the other thing is that what we all know is that it's a handful of mega cap stocks kind of holding things up. on a day-to-day basis. Um, like here's the Russell 2000, right? Russell 2000's kind of still trapped in this range. Been selling down for a few days. The Nasdaq's been extremely strong, and look at this run. It's just on a tear here, hitting a new high today, gapped up. Looks like it's pulling back a little bit, but anyway, just a weird market in general. And the Dow, interestingly enough, the Dow itself has been kind of weak, right? We looked at that last week too, and so I mean it sold down, bounced back, but it's still kind of it's not hitting new highs like the Nasdaq or the S&P. I mean, if you look at look at this, and then you look at the Nasdaq 100, there's a big sort of difference between this current run that it's on. So anyway, I use the S&P sort of as the what I call the market, but it is what it is, and of course what we're concerned about is individual stocks. Look at the RS. Oh, you can't see it on the screen. Real quick before we start looking at these individual stocks, look at the RSI on the Nasdaq here. It's it's at 77, right? RSI 77 on the Nasdaq 100. So that's kind of interesting. Real quick, let's look at the RSI on the SPY. Right at 70, so that's kind of pushing the envelope a little bit. Of course, we know it can get way more overbought. It's pouring down rain here all of a sudden, by the way. Got a little tropical storm rolling through today. I don't think it's going to be a big deal. A little wind and rain. Hopefully my power will stay on. But anyway, so I figured what we would do today is take a quick peek through the open trades. Now we had one that got stopped out, this JO. It was one of these weird ones where it had the big push right out of the gate and then just rolled back over. So I've never been a huge fan of this ticker symbol, although we had a good trade in it over here, but in the past there's also been a couple of stop outs, so it's kind of a low volume deal. But anyway, so I think that was, let me check to see here. So that was like, pretty much a full stop out, 3%. So 3% is it looks dramatic on the chart, but roughly 3-4%, nothing to get overly concerned about, especially when you look at how some of these open positions are doing here. So anyway, let's start at the top here. And something else weird is, and we'll get to this at the very end of the show, is that so last night I sat here and updated everything and went through all these, and lo and behold, this morning I checked on Twitter, which is the oldest open position, and everything that I marked on the chart is gone. And so kind of frustrating, because last week I was complaining that I think I forgot to save something and some of the stuff got erased. And so this time there's I've discovered that there's some kind of bug on these stockcharts.com lists where I mark it up, because I sat here last night and I know for a fact that I saved everything and all my marks are gone just on one symbol. So it makes it's kind of concerning, but I don't know what to make of it. Anyway, so this Freshpet is it's not looking that great, Not looking that great. It got this initial rally, but no follow through. There was there was a nice trend line break here. Figured I might as well start attempting to draw on these charts. Why not? Just can't hurt anything. So you can see what's going on over here. But anyway, get that chart real. See if I can get it just right on the screen. Anyway, so there was the trend line break and no follow through, and it's just kind of fallen back. And so that initial stop is basically just The initial stop is just sticking where it was. So nothing too exciting to report there, other than there's some support right around here. No big deal. Down a couple of percent from the entry, but see, here's the thing: is obviously not all of them are gonna just take off and rip higher right out of the gate, and so we're kind of playing the odds here. And the best thing about what we're doing is that the stop outs tend to be minimal, right? Like you can go down the list and look at the stop outs, and then of course the ones that get some follow through on their trend resumptions, they get some follow through to the upside. Well, then we let them run, and that's where the law of averages comes in. So that's just how it works. So they can't all be like it's just not the way that it works. So anyway, something like this, you can see that the trailing stop has moved up, ratcheted up since the initial stop, and here's another one that really nice setup here, and triggered in, but just didn't get any follow through. Hasn't gotten any follow through yet, and there's one of the things about trailing the stop up is that, which is fine, but this is sort of the way that we designed it, is that like this initial stop, this stock could bounce around and come back down and do all this stuff and not hit that initial stop, and then down the road rally back up. But part of the way the system was designed is to get that get the stop up as quickly as possible and try to get it to break even. So here's a case where the trailing stop has moved up just below this last little pivot low, and it looks like it's pretty close to the price action, so it's in jeopardy of getting tagged. However, percentage wise, if it does get stopped out, will be minimal compared to a full stop out. So a full stop out would be where the the initial stop never got a chance to trail up at all and tighten up. And that happens occasionally. It's kind of rare. I think JO was, JO would be considered well, no, it wasn't actually, because this trailing stop. Oh, and by the way, trailing stop like this, the stock gaps down below it, then you just wanna get out. So that's just sort of the way that it works. But anyway, let's move down the list here. Things start getting better as we go down the list, right? Here you got alarm.com. It's interesting, the first couple of stocks on the list are the newest ones, the Freshpet and Ciena, and they're not looking so hot. As of the close last night, the one was down 2.6% and Ciena was down, 0.5%. So real minimum things. So you don't get discouraged by a few percent in this market. But as we get on the list, the ones that are working, I mean, they're really, really working. So we'll get to those in a minute here. But so far, so good on this one. Now, it hasn't hit the target, which hasn't hit the target yet, but the trailing stop is above the entry. And so that's a positive. And so basically this, let's see, as of the close yesterday, it was up 4.6% from the trigger price, and this trailing stop is over the entry. This one got filled right at the trigger price. So there was this close here. Basically, this day it gapped over, closed above the trigger, and then the following day right at the trigger price. So anyway, even if this one were to come down and hit the trailing stop, it would basically be a wash. No big deal. Maybe a couple of percent, so no big deal on that. But so far so good. It's trending up. The stop has ratcheted up several times, as you can see, and so this target's just basically sitting up here, and the last little pivot low back here is where the stop is sitting right under, and so if it can, it's got a pretty decent looking little pattern here, but it's trending up ever so slowly, and it seems like the ranges on this have sort of tightened up a little bit compared to back here. So we'll see what happens with this. Yeah, this is kind of, at this point, it's sitting right in between the target up here and the current trailing stop, kind of right in the middle. So alarm.com. Moving on, we have Pfizer. Pfizer's another one that's just kind of, it's just kind of hanging out. Just kind of hanging out in sort of a sideways range here. This is not a very big range, obviously. You can see 39, 39.50. So it's just chopping around in this range. Triggered in on a big move to, a high, and then ever since then it's been sort of pulling back and consolidating. And this is another one where, this initial stop, this thing could stand for a long, long time, but trailing stops moved up to basically just under the recent price action. And so now let's see, Pfizer is basically flat. It's basically, well, it's down a little bit, obviously, from the entry, but not a whole lot percentage-wise, and it doesn't really move a lot percentage-wise typically, unless it goes on one of these big runs. But so we will have to see what happens with this one. But the thing of it is, so those first four are kind of a mixed bag, nothing too exciting, but the if a stock is flat to down a couple of percent or whatever, and I mean, obviously we don't know if you don't know if it's just going to turn right back around and resume the trend, or if it's going to roll over. But the exciting part comes in when you latch on to the ones that work out well, and so here's the first one. The first one of the three, as of yesterday's close. Now it's down a couple percent today, but as of yesterday's close, this was up over 18% from trigger price, and you can see that trailing stop is, trigger was 90, trailing stop sitting at 100 now, so that's interestingly enough, the trailing stop is where the actual target was. So it was like a 10% target, and so now there's basically a 10% gain locked in on it no matter what. And so the idea is that obviously it hit the target, and so that's where you take half off the table and then continue to follow with the trailing stop, which is 10% higher than the trigger price. And of course the entry, there's a little bit of compensation here, so, but looking pretty good. I mean, this is this day back here. Let's see well, I can't tell without putting my crosshairs on here, but so that was June 24th. Big spike up long range day, and so right now it just looks like it's sort of consolidating this move here, and it'll be interesting to see if it takes the next leg higher, or if it pulls back first and tags the stop. So if we get like a pullback like this last one, it would come down and tag that stop. If we get like just a little consolidation and a dip like prior to that, then come down a little bit and then could easily continue this rally. It's got sort of this stair step looking rally going on here, which typically bodes pretty well, and should look pretty good, quite honestly. Everything about this has a good look to it, and so far so good. moving on, there's only a couple left here. This one, SLAB, another good example of the potential, the potential for some of these swing trades to work out. This has been open since 520, way back over here, so well over a month. And look at how this stop is starting to tighten up here. That's another sort of thing that's programmed into the system, is that when the stock makes sort of a move like this over time and the stop begins to tighten more aggressively. It's hard to explain, but I guess that's the way it's best way to mention is that the stop tends to get more aggressive. And so when it first starts out, there's a lot of sort of leeway. It depends on the initial stop, but you can see that even over here it was kind of hanging back quite a bit. And there's times where I wonder if the stop, and I mentioned this on the show sometimes, I'm like, wow, that stop seems really sort of far away from the price action, but over time the stop gets more aggressive and tightens up faster, and as you can see, it's basically right under this current price action. So this was up 19.7% as of yesterday's close, and consolidating here in a little range between 150 154 bucks. And so one of two things happens. It either breaks out and stair steps to the next level, or comes down, tags a stop, and then that'll still be a really nice gain locked in. So this one worked out pretty well. And as I look down the list of open trades here, see what this looks like. As I look on the screen here, I knew this was gonna. The way that the screen's sort of set up is a little weird, because the charts show up one way and the list shows up the other way. But so you can look down these gains here and see that even though we got a couple that don't seem to really be doing anything, these make up for it. And so that's kind of the idea there. And I mean, ideally we'd have all big gainers like this, but as time goes by, the what's the old saying, let your winners run and cut your losers short. And so that's the sort of the main theory behind the way everything's programmed on the back end, and it works out pretty well, right? I mean, every now and then we get the full stop out or whatever, but they tend to be fairly minimal, as opposed to catching some of the ones that really make a run. Which brings me to the last one on the list, which is Twitter. And so this morning I went through my charts and realized that, and I mean, I had marked all the. I looked at this last night, and I know I saved it, right? Because I updated the stop. So the current stop on Twitter, the trailing stop, is at 67. So I'm going to go ahead and put that on the chart here. So let's see. 67. That's going to be right. Close enough. Close enough, right here. You can see it's a little bit of a challenge. A little bit of a challenge to get these things exact. But so here we go. T-stop, $67 even. Zoom that out. Now I'm going to hit save, just like I did last time. Boom, save. And so the funny thing about this is, I had I've always had a problem with this one, right? You guys remember like weeks back, I mentioned that for some reason the initial stop that was on here had disappeared, and then I'd marked some stuff. But here's the thing, like suppose I forgot to, I marked a bunch of stuff on here and saved it, and then I come back the next day and mark something else on here and forget to save it. It should still save everything that I've marked on here. So I spent a lot of time updating all the trailing stops along the way here, only to have them disappear for literally no reason at all. I've saved this chart, every time that I've marked it up, I've saved it. And so there's no reason I can think of for all of my marks to disappear, but it is what it is. Anyway, so, Twitter, which is down a little bit today. Funny thing is the S&P is up. It's basically flat. It's up like 3 points here, but like literally every stock in the watch list is down today. And I have another big watch list on my other screens over here on Thinkorswim, and it looks to me like the majority of stocks are actually down. And so, well, the Dow's down 29 points, which is basically flat. The indexes are flat, but under the surface, a lot of individual stocks are not acting nearly as well as the indexes, and especially the NASDAQ. And so, it kind of goes back to what I was saying before about the mega cap tech stocks sort of holding everything up, right? I mean, there's like seven of these stocks that are half of the NASDAQ. Apple and Microsoft and Amazon and Google and Facebook and the couple I just forgot to mention are basically half the index, right? And so you look at Apple. I mean, Apple's just on a straight up tear here, and I mean, right at its all-time high. Look at that. And so basically that's the one of the reasons that the indexes are so hot, and they can talk about new all-time highs in the market and the NASDAQ and all this and that and hype it up. Meanwhile, under the surface, it's a whole different story. I mean, I'm looking at some of the stocks on like my watch list are down significantly today, 5-6%, 2-3%, and so it's kind of crazy. Let's look at this ARK is another one that I kind of like to look at. This as sort of like a proxy for the momentum stocks, I guess you would say. Momentum stocks, high tech, whatever you would say. And so here's what's really sort of happening with a lot of stocks that aren't in the nifty, the nifty top 10 market cap stocks that are sort of holding everything up. You can see that we got some weakness going on here. So that's kind of what's happening. But anyway, it is what it is. Overall, I would say that this latest batch here is going to end up pretty well. No matter how it shakes out. If we closed all these positions today, these three are going to make up for any of these other ones that have minimal stop outs. So not a big deal. And of course you will see that there's some couple new pending trades, right? The market really kind of needs to pull back, shake out a little bit. I thought something was really interesting. I mean, look at all these new all-time highs in the S&P, right? And the CNN, like the fear and greed indicator, is like sitting on fear, which seems really weird. But you would think that market making all these new all-time highs every day and this and that that people would be euphoric. They love to use that term euphoria, but that's not the case. For whatever reason, for whatever reason, people are nervous about this market, and they probably should be because it's just a weird sort of thing where and we've seen this so many times over the years where the actual indices or indexes are masking underlying weakness in the overall market, right? So anyway, so far so good with what we're doing here. The last thing I want to mention real quick is that out of all these open positions over the next few weeks, next couple of weeks, um, earnings are coming out on most of them. Actually, all of them except for two. Earnings are due out in the next couple of weeks. And so those will be getting closed ahead of earnings. And you can always check right there on the home page when you log in. There's a note that I put in like the night before when I do the update in the evenings. I put a note in there of any trades that will get closed the following morning at the open ahead of earnings. And I think Twitter's on the 22nd, if I recall. And so that's still a couple of weeks away. So, yeah. So anyway, earnings season's gonna start gearing up, I guess, in the next week or two. And then by the end of the month, if some of these haven't hit their stops, or their trailing stops, they're going to get closed ahead of earnings anyway. So earnings season is always it's actually a good sort of, what's the word I'm looking for? It refreshes the whole list, right? So these things, I mean, they don't stay open forever. Like earnings season comes around and it sort of, weeds everything out, and then we kind of start fresh. So, which is kind of nice. And also the other thing earnings season does is occasionally we get some stocks that are on the pending list that actually trigger in because they get a good earnings pop. So basically, we don't hold any stocks over earnings, but sometimes we let earnings trigger us into a stock. So anyway, market hit another fresh all-time high today, and then I'm sitting here and watching it sort of, look weak, and I'm watching a lot of stocks that are having, pullbacks, and so it is what it is. Yesterday was kind of maybe a yellow flag, but in the big scheme of things, we're so extended from this trend. We're pretty far extended from this trend line. If for some reason, whoops, I didn't mean to do that. If for some reason, bigger scheme of things, this trend line breaks, then things get really interesting. So the only other thing to keep in mind is that the Fed minutes come out today, so that'll be kind of interesting to hear what the Fed's thinking about doing. And with that, I will bid you adieu, and I will see you here again, same time next week.